May profits be upon you, and happy holidays. I hope your Christmas and your New Year's will be the best that you ever had. I got nothing better to do today. I'm not trading today, so I'm doing some analysis and going over back testing and all kind of good stuff, to just get better. All right. Let's look at the situation that we have with US30, otherwise known as the Dow Jones Industrial Average Index. All right. Let's do some top down analysis. We'll start with the monthly. We can see that price is always generally in an uptrend. All right. And it's always best to take buys, look for buying opportunities in the indices because uh, throughout its history, it's always moving up. Right. Yeah. It has the occasional dips here and there, but for the most part, you want to be on the buyer side, right? And from a supply and demand perspective, you can see that we've created a bullish engulfer here, all right, which would indicate price should be expected to go higher. Price did come back into this demand, and then we had a bullish reaction, all right? Again, from this point, we think that we should be thinking that price will probably see some further gains. Let's go to the weekly. Here we go. All right, what do we see on the weekly? All right, it's time to start showing some things. All right, what do I have here? All right, with that, what I'm looking for is higher highs, higher lows, higher highs, higher lows. All right, and with that in mind, I want to point out, whoops, excuse me. What I want to point out is at this higher low, we made this higher excuse me, at this higher high, we made a higher low that broke that higher that low that higher high here. So that makes this a strong low, and this breaking of this market structure here, this higher high, makes it a strong low. And we see that impulse is very powerful, very massive. Okay. Now, after a break of structure, we expect what? An RTI, a return to impulse, or some people will call a return to origin. All right. Where the impulse originated. And that's exactly what happened here. And we formed a weekly order block. All right. A weekly zone of demand. All right. Also creating some liquidity points. At the end of all of these wicks is liquidity. People who have stop losses to take a long, and for people that have pending orders to take breakout trades to the downside. And what market makers like to do is come back to these areas and raid those liquidity points on the lows or the highs. All right, I have it tagged here. All right, you can see as price climbed, we took liquidity from here, took liquidity from there. All right, and this is the area that I'm looking at now. All right, why do I have strong high here? Because price broke this low to the downside. We'll see that a little clearly on the next time frame, which is the daily. Let me have my pointer back. Gotta have that, right? Okay. So we see the price action a little more clearly here, right? See the breaker structure. We see price top out here at an all-time high, come back for the return to impulse, and created uh, uh, a, uh, a daily zone of demand, but we are within a weekly zone of demand, right? We see how price made this bullish pattern here, all right, representing demand. Price broke to the upside with a very strong impulse from here, all right, and we broke these short-term highs here. Okay, that would make this potentially a strong high. Let me make sure you understand that the difference between a strong high and a weak high, a strong low and a weak low. I'm sorry, is that uh, weak points of interest, weak lows or weak highs get ran for liquidity. That's what you want to bear in mind. This one didn't break that high. All right. It broke some short term highs. All right. Giving it some strength. Right. But when you have a strong high like this one, this one didn't create a new low. This is a weak high. Why? Because it didn't break these lows. All right. And when you don't break the lows, there's potential for this to get ran, and eventually this will get ran because this is an indice, and it just travels up. All right, it's just that's all. That's basically what it does. All right, so this is a weak high. It's probably going to get ran for sure. All right, this is not a new low, so it is a weak low, and when price does head back down here, there's a good chance that this is going to get ran for liquidity. That's why I have this here. All right, this low, these two lows will probably get ran for liquidity. Okay, and uh, let's go to the 4 hour. I want you to see something very clearly. Where's my thing? Thank you very much. Gotta have that, man. You gotta have that. Matter of fact, I'm going to change the color so you can see it a little more clearly. Okay, so what do we have here? What do I want you to see? We have some zones up here, a weekly supply zone, all right, and a daily supply zone. Okay, and we have to have the understanding that price only pivots, it only turns at points of demand or points of supply, order blocks. All right, and if price comes up and just abruptly turns around, I'm looking over here to the left to see what order block did it hit. You understand? All right, and after a while of working with order blocks, you start to see which one is more valid, which one is valid and which one isn't, and which is stronger and which are weaker, right? All right, but what I want you to see is this 4 hour display of a break of market structure. This low, excuse me, is responsible for this high breaking that high. All right, and uh, so if this higher low was broken, that's a structural point. Now this is within the range from this low to that high, from that lower high to this lower low. This lower low, yes. Uh, uh, this is the trading range, and when it's within the trading range, I don't look at it as major market. I look at it as micro levels or intermediate levels of structure. All right. So I'm looking at this break of structure here and then a return to impulse. I'm looking for price to turn bearish here. All right. Because we broke that low and I'm thinking there's some strength to this high, and we want to see if price will continue bearishly. Okay. That's my reasoning here. I do think there is big potential for a price to run the highs here. You see how it ran this high all the way over. All right. These are the next points. Actually, this one too. All these points here is liquidity, and prices definitely going to run that liquidity at some point. But is it going to make a higher low here, and then go up? Or matter of fact, it'd be better if I did it this way. You know, there is the potential for a come on, man. There is a potential for this to turn into a quasimodo, a head and shoulders pattern. All right, because we have a higher high, a break of market structure here, and a return to impulse. If this remains low and doesn't break this high, it becomes that that right shoulder that I'm looking for. And I would like to see it play out. All right. At least in part here or here, and then return. This is if you divide this trading range into halves. All right. I want to get this half. I want to get this half for a long because this is the discount price. This is the premium price. I don't want to pay premium price for a long. All right. I needed to come past the 50% and come down to at least a 61% pullback. And then I can take that, if that makes sense. I hope it does. That's my thinking in the short term. In the longer term, we're going to run these highs. We're going to run that high here, here for liquidity, for sure. It's just a matter of when, and we'll watch that as the market opens. We're already having a little rejection here, so maybe we might see a short-term play here. All right, for people that want to take shorts, a nice intraday trade, I would be interested in that. What am I looking for? I'm looking for price to transition from bullish to bearish momentum on the lower time frames, and that would give me the way I would see that is exactly what I was just mentioning here on the shorter time frame, because we know that price is fractal. I'm looking for that Quasimodo. I'm looking for a head and shoulders to play out on every point of interest. When price turns from bullish to bearish momentum, you're going to see some variation of that or this, which is what I tend to look for. All right. I like to see that break of market structure there. It demonstrates that price wants to go lower. It comes back, tests the order block, the impulsing order block in this impulsing leg of structure, and this is the entry for your short. Bam! All right, with the head and shoulders, you're looking for a more symmetrical entry. All right, here, then bam! All right. Hope all of that makes sense. I hope you find the videos beneficial. I would love to get some feedback on this because I'm always interested in improving. Okay, if you agree with this analysis, leave me a comment and explain what you're seeing or where you think we might differ. All right, and if you want to encourage, if you want to support what I'm doing here, I need a thumbs up, and that's all I ask. Let me have the thumbs up, and that'll be it. All right. And I really appreciate those that have been supporting me all this time and those that subscribe. And you'll find I have some uh, uh, a lot of information on my YouTube channel. If you just check below where it says where you can find me. Uh, for those that are on TradingView, you can hit the YouTube button. And for those that are in my free Telegram, hey, uh, you know, I'm glad to see you there, and you know what I'm about already. You can see the link to that uh, under my in the description of this video. Have a great holiday. I'll see you back in the markets when it opens up. May profits be upon you.